Okay, I'm Dan Fitzpatrick, stock market mentor, and this is Fitz in 5. Now, I was planning on doing kind of a longer analysis of Tesla. Bought this just right at the end of the day for the simple reason that it's the only time I saw it. Otherwise, I probably would have bought it earlier. So this is just where the resistance line was. Bought the stock again late, but I don't think too late given the pattern. Put the stop just a little bit below 370. That's the trade, okay? Enjoy. Now, this is what I'm doing. In a few weeks, I'm going to be over in Las Vegas teaching with some of the Investors Business Daily guys at this annual Founders Club event. It's going to be it's a one-day deal, but it's going to be a great day. And the guy leading off, like the first presenter, is absolutely awesome. Oh, that's me. Anyway, but it's 2,500 bucks, and I get none of it. I'm actually paying to go over there, but it's going to be should be a good session. One of the things, the reason I'm telling you that is if you want to go for the full boat, dude, go over there. Love to see you. In fact, if you are one of my members or just on my email list, which you will be if you're watching this, definitely come and introduce yourself to me. I want to meet you. Okay. I know a lot of people are coming anyway. So I want to talk, though, about just one element that I'm going to be teaching about, and that is screens. This will just be a part of what I'm talking about. But the idea of these screens, I look at it as a process of exclusion. Like I don't want to look at anything that's not on my screen. So I got to get my list down as much as possible, as long as it's not too narrow. Like if you have, let's say, what if you have 10 criterion that you're really, really wanting, and one of them only meets 9 of them, but still it's off your screen because you required 10. Okay, you could be missing NVIDIA. So the point is, you need to have some kind of rhyme or reason to your screen. But this is the way I look at it. Somebody was asking me just the other day about the impact of AI and on trading. And I said that I think we've been using AI for decades, and that's what screens are all about. Because what you're really doing is you're coming up with something that you're interested in getting, and then you're asking your computer, your software, to find it for you. That's what AI is. And so we're already there. Now, this is what I want to show you. I'm going to bang through a bunch of stocks and then I'm out of here. And members, I'm sorry, but I actually go over this in tonight's strategy session too. Anyway, so starting with 10,000 stocks, these are just the criteria. There's nothing secret about this. These are just the criteria that I've used to find stocks that meet my criteria, which is high relative strength rating, volume is good, price is above the 50-day or just kind of right at the 50-day moving average. The price is above the 200-day moving average. They've got strong earnings, and then they've got a good hierarchy here where the 50-day is above the 100-day, which is above the 200-day. So what we're really defining here is a trend. All of these things take me down to 105 stocks out of 10,000. And then I'm looking for, okay, the relative strength line at a new high. Okay, that cuts 3/4 of them out. Relative strength line means that the stock is doing better relative to the rest of the market than it's done, at least in recent history. So you've got the relative strength rating above 90. So it's already killing 90% of all the stocks in this database. And now we want to see it making new highs. All right. So we had removed the after-tax margin requirement here. I'd put in an after-tax margin acceleration requirement. And when I put that in, that took me down to 11 stocks. So I got 11 stocks from this scan. Thank you, AI. So this is what I did. I put these all in a list, and I did this scan on November 1st, 2023. And then what I wanted to see was, how would these stocks do over the next 6 months, over the next year? And so all this time later, I have plenty of data to show for it. And I'm going to show you the power of scans. And again, this is a good scan. Write this crap down, man. It works. Okay. I'm giving it to you. You can thank me later. So these are the stocks. Now, I'm not going to analyze these charts. That'd take too long. There's 11 of them. But I want you to keep an eye here. This is where we start November 1st, 2023. This is where we end November 1st, 2024. So let's say you bought every single stock that we're going to look at right here where it is on November 1st here, and we sold it right here on November 1st the following year. All right, I'm going to show you something. First of all, you should see a bunch of stocks that are doing this, that are moving up according to this scan. Can you see trades in here? Can you see stocks to be holding? Because I can see a bunch of them. Again, like buy and hold. Even this one that really went around the horn here, even made money on this by the end of the year. Okay, so all these stocks came from that scan, that one scan you look at one time, and then that's your basket of stocks that you're trading, at least in this in this example. So these are the 11 stocks here. Now this is where it breaks down. Okay, so November 1st, 2023, November 1st, 2024. These are the prices, the respective prices here. So if you just held for the year, your return on these stocks, it would all be positive. You'd have made money on every single stock. And there were no single digit returns. There were no returns under 20 bucks. There were only two stocks that were under 30 bucks. And that's, by the way, the S&P 500. That's one. And then Williams, I think that's Williams Sonoma, is the other. Everything else is just a great, great return for a year. Now, if instead we said, hey, well, what if I traded it? What if I was like the best trader in the world and I was able to top tick every single one? Or just put another way, what's the maximum amount of money you could have made in that? What's the maximum amount of money you could have made on these stocks? Okay, so maximum amount percentage wise, look at the percent here: 45, 90, 104. The hits just keep coming. The point is, scans and screens work if you've got them set up the right way. During this holding period, this November to November, the S&P went up almost 29%. By the way, that's a pretty monstrous return. The Qs, NASDAQ 100 went up 32%. Okay, the maximum that this went up was 40% and 44%. So those are really, really monster returns just hanging on to the indexes. Okay, but the basket of stocks that we were looking at, they went up 62% on average. Just holding the things, just buying it, going on vacation, yawning a little bit, putting some suntan oil on, make sure it's a good sunscreen, sun protection factor. Otherwise you get skin cancer and your skin looks horrible. Anyway, so you get a 62% return by buying and then taking the year off. But if you were actually trading, your maximum return on average would have been 78%. Again, your mileage may vary. This is a theoretical maximum. The point that I'm making is screens work, scans work. If you have criteria that works for you, you need to be using those scans and screens because what it will do is it will take all these stocks that you shouldn't be looking at anyway. It'll take them out of your line of sight. And that's really what you want. And you can, by the way, you can check out all this stuff because I have a boatload of scans on Stockwatch, which is my app that I created. You've got all these different scans, and one of them is this what I call the best of the best that's in here. somewhere. And that was just like the scan that I used for this particular one. So yeah, right here. So the bottom line is you have a lot of ways to do scans. You can go MarketSmith, TC2000, whatever you want to do. You can use my thing if you want. But all I'm saying is don't just sit there every day in front of your monitors going, well, what am I going to trade today? That is definitely the path to underperformance. I don't want you doing that. I want you making a gang of money. By the way, a little plug for my buddy Scott. I just saw um, hang on, I got to show you. Um, this is, he just got this. Um, he just posted this, gave it to me a little bit ago. Last year and this year, I made only crypto and crypto stocks, which kind of ticks me off, but okay, enough to be with CMM for the next 100 years. 100 years. I got a feeling that if she's in for 100 years, neither Scott nor I are going to be helping her on the back end. But the bottom line is Scott's crushing it over at CMM, and so are our members. So if you're not a member of Scott's website, I mean, we're partners on it, but if you're not a member, frankly, you really need to fix that because I'm telling you, this guy absolutely is crushing it. He does webinars every week, a Wednesday webinar. He does strategy sessions, got all kinds of stuff here. It's 100% Scotty. And if you can't make money with Scott, then you probably not going to be able to make money at all. Okay, that's all I got for you. And I'll talk to you on the back end.